Good morning everyone. So last class we completed the concept relating to preparation of financial statement. Today we'll be learning about another aspect, okay, which is still a part of financial statement. So certain companies, if you guys remember, so they'll be preparing financial statements, and that would be including the statement of P&L account, the balance sheet, the statement of changes in equity, and cash flow statement. And again, when it comes to cash flow statement, if you guys are able to recall, I told you that this is not mandatory for all the business entity. Okay, so the financial statement, as you guys are already aware of, will mainly be including what? The statement of profit and loss account, balance sheet, cash flow statement, and statement of changes in equity. So the statement of changes in equity also we just learnt in this previous unit. If you guys remember that division 2, okay, so we learnt about the statement of changes in equity, right? So statement of changes in equity, statement of changes in other equity. You guys remember statement of changes in equity, share capital? So there were a lot of columns, if you guys remember. Yes. So P&L account, balance sheet, schedule 3, you guys already know how exactly are we supposed to prepare. But when it comes to cash flow statement, we'll be understanding in this particular chapter 3. So as the very name suggests, look at this name. The name itself will be conveying the meaning of the term cash flow statement. So this is a statement which will give us information about the flow of the money. Okay, so cash is nothing but money, right? Correct. So what exactly is the flow of cash? Okay, this is a statement which will be giving us information about the inflow of money and the outflow of money. So when it comes to any business organization, a lot of transaction would be happening through cash and cash equivalent. Okay, so this statement will give us information about the inflow and outflow of such transaction. So broadly we'll be classifying these transactions, okay, like how much is the cash flow from operating activity, how much is the cash flow from investing activity and financing activity. So don't worry, as of now, each and every term will be explained in detail, like how exactly do we identify whether it is cash flow from operating, investing or financing activity. Everything you guys will be learning. As of now, let us just understand the meaning of this particular term. Okay, so briefly it is as good as a statement which is prepared by the companies, which will be forming part of the financial statement, which gives us information about what? The inflow and outflow of cash and cash equivalent. Simple? Alright. Now let's just see what exactly have they given in your study material. So whatever is important, as usual, will be writing in our notes, and ultimately if you guys just go through the notes, that would be more than sufficient. Okay, so let's just look into this. In addition to statement of profit and loss and balance sheet, companies also prepare, okay, cash flow statement. Look at this. In addition to statement of P&L account and balance sheet, certain companies, now this cash flow statement is not mandatory for all the companies. So certain companies like 1-person company, small company, dormant company, they need not prepare this cash flow statement. Okay, so they have been given the exemption of not preparing this particular cash flow statement. Clear? So as a part of its complete set of financial statement, cash flow statement is an additional information source to the users of financial statement. This statement exhibits, okay, the flow of incoming and outgoing of cash and cash equivalent. Okay, incoming is nothing but inflow of cash and cash equivalent. Outgoing is nothing but outflow of cash and cash equivalent. So this particular statement will give us information about the incoming of money and the outgoing of money. Clear? Okay, it accesses the ability of the enterprise to generate and utilize the cash. So how exactly an enterprise is able to generate the cash, and in what manner is it able to utilize this particular money? Okay, so how efficiently is any business entity using this particular money? How are they going to generate the money, and with this generated amount, how are they going to utilize it? See, if I'm able to generate 100 rupees of income and if I'm not utilizing it efficiently, okay, that again would lead to another problem. So this particular cash flow statement will give us for what and all purpose are we spending the amount. Okay, is there any source which is not necessary and we are still spending the amount? All these information will get to know by just looking at this particular cash flow statement. Now you guys might have seen certain business entities, right, which are making good amount of profit. Okay, but they are lacking in liquidity. They don't have liquid assets. Okay, so let's say each year the profit of business entity is increasing. Okay, but when it comes to cash, they are not able to manage this properly. Okay, so cash balance always it is reducing. Okay, so they don't have much of liquid asset. So because of this particular reason, they are not able to manage the business okay, in an efficient manner. Okay, this again will lead to all of a sudden closure of the business entities. So although few companies are making good amount of profit each and every year, the graph, if you see, it is growing. Okay, but all of a sudden, okay, one fine day this particular company gets closed. Okay, the main reason is they are not able to manage this particular fund efficiently. Clear? All right. So all these things, when it comes to financial management, you guys will be learning. Okay, so how are we able to, or in what manner are we supposed to manage each and every component? Okay, so whether it is cash, whether it is inventory, so what exactly are the tools which we need to use? Okay, so what exactly are the technique which we need to remember in order to manage each and every component? Clear? Okay. In other words, the statement is important tool for assessing the liquidity position, okay, and the source of the liquidity. So cash flow statement will mainly give us information about the liquidity position of the business entity. Clear? All right. Okay, so as per statement of financial accounting standard 95, you need not remember all these things. Okay, so statement of cash flow issued by Financial Accounting Standard Board of USA, the information provided in the statement of cash flow, if used with related disclosure and information in the other financial statement, should help the investors, creditors and others. Okay, this will be helpful for the investors, creditors and others. For what purpose? Look at this. To access the enterprise ability to generate positive future net cash flow. Okay, to assess the enterprise ability to meet its obligation, its ability to pay the dividend and its need for external financing. So assess the reason for differences between the net income and associated cash receipts and payment, and assess the effect of enterprise financial position of both its cash and non-cash investing and financing transactions during that particular period. Now let me explain all these 4 points. Okay, 4 simple points. Now this statement of cash flow, okay, or cash flow statement, it will be helpful for the investors, creditors or other users. For what purpose? First thing is, in order to assess the enterprise ability to generate positive future net cash flow. By just having a look at the cash flow statement, a particular user will be able to access whether this particular enterprise will it be able to generate future cash flows, the positive cash flow. Now when do you think you will be getting positive cash flow? Yes, when I say net cash flow, this will be equal to inflow minus outflow. Clear? So when do you think you will be getting positive? Only when this inflow is greater than the outflow, right? So whenever the inflow is greater than the outflow, only then you will be getting positive value. Agreed? Okay, so this is a kind of favorable situation. Okay, so if I've got an inflow of let's say 2 lakh rupees and if I'm spending let's say 1.2 lakh rupees, I'll still be having 80,000 rupees of cash which is left over. This is positive cash flow. Okay, so when do you think you got positive cash flow? When this inflow was greater than this particular outflow. Okay, so by just having a look at the cash flow statement, the user will be able to access. Okay, so look at this, assess the enterprise ability to generate the positive net cash flow. Now by just having a look at this particular cash flow statement, I can just estimate that in future also the business entity will be able to generate positive cash flow. Clear? Now let's say the inflow is 2 lakh rupees whereas outflow is let's say 3.2 lakh. Okay, so here net outflow I'll be getting of 1.2 lakh negative. This is not a good sign. Okay, so this was a favorable situation whereas this is an adverse situation. Okay, so this is not a good sign. By just having a look at this particular cash flow statement, I can determine that in future also the situation might be worse. Okay, it might be worse than this. Okay, so that is what they are telling. The first information is any user will be able to assess the enterprise ability to generate the future positive cash flow. The next thing is assess enterprise ability to meet its obligation. So whether the business entity has got capacity to meet up its obligation or not, even that information can be generated or people can determine by just having a look at this particular cash flow statement. Its ability to pay dividend. The company has declared the dividend but it does not have any balance in their bank account or cash account. Okay, so does the business entity has got the potential to pay this particular dividend? Even that can be ascertained with the help of this particular cash flow statement. The third thing is assess the reason for differences between the net income and associated cash receipts and payment. See, normally what people would be thinking is If I'm making a profit of 2 lakh, I should be having a cash equivalent to 2 lakh. This is not a true statement, right? Correct? Because for the purpose of ascertaining this profit, I'll be considering few non-cash item as well and few other items wherein cash is not a part. Suppose bad debts, okay, so outstanding expenses, depreciation. So these are the item wherein cash is not involved, okay. But in order to calculate this profit, don't you think I'll be considering all these items, whether it is depreciation, whether it is bad debts or any provision for that matter, okay, or any outstanding expenses for that matter. All these items are non-cash, which are still considered for the purpose of determining this profit. But when it comes to determining the cash which is available, will I be considering all these non-cash items? No, right? Whether it is bad debts, whether it is provision, whether it is depreciation, all these items I'll not be considering when it comes to preparing this cash flow statement. So that is why I cannot compare this profit with this net cash flow. Okay, I cannot say that if I made a profit of 2 lakh rupees, exactly 2 lakh rupees of money should be available with me. No. Clear? So look at this. Assess the reason between the reason for the difference between the net income. Net income is nothing but the profit and the associated cash receipts and payment. Okay. So net cash flow is this much and the profit is this much. What exactly is the reason? The reason might mainly be these non-cash items like depreciation, provision for bad debts, etc. Clear? Alright, let's have a look into this fourth point. Assess the effect on the enterprise financial position of both its cash and non-cash investing and financing transaction during the period. So when I'm preparing this cash flow statement, remember I'll be showing cash flow from operating activity, cash flow from investing activity and cash flow from financing activity. So I'll be able to clearly determine, okay, so where exactly the problem is situated and how exactly can I rectify the same. Okay, look at this. Assess the effect on enterprise financial position of both its cash and non-cash investing and financing activity. So here if you see, they're not using the term operating activity. Why? All my operating activity or operational transaction will not be forming part of my balance sheet. Here they're talking about what? Financial position. When they talk about financial position, which statement do we prepare? We prepare balance sheet, right? Okay, so in the balance sheet, I'll be able to access the information only with respect to investing and financing activity. Operating activity will be an integral part of what? My P&L account. I hope you guys understood this. Clear? Alright, so in India, the preparation and presentation of cash flow statement for eligible entities is guided by Ind AS 7, that is Indian Accounting Standard 7, and when it comes to accounting standard, it was Accounting Standard 3, and by Accounting Standard 3 for companies to which Indian Accounting Standard is still not applicable. So when it comes to Division 1, you need to consider Accounting Standard 3. When it comes to Division 2, for which Indian Accounting Standard is applicable, you just need to follow this Ind AS 7. Clear? Alright. Okay, this was a brief background of this particular cash flow statement. Okay, so let me just write the important points. I'll just zoom out a bit. I hope now it is visible. Yeah. So first let us just write the meaning of this particular term. So when it comes to cash flow statement is a part of financial statement of the company. This statement shall provide the information with respect to incoming and outgoing of cash and cash equivalent. Clear? So this will mainly give us information as to inflow of the money and outflow of the money. Okay, so don't worry about what is cash and cash equivalent. Cash you already know, this is nothing but money. What about cash equivalent? These are nothing but the short-term investment which can be converted into cash. Okay, so those investment or those assets which can readily be converted into cash. Okay, so if I've got like investment, if I'm selling it today and tomorrow if I'm able to generate the money, that would still be considered as what? Cash equivalent. Okay, it is still an equivalent to money. So you sell it, immediately you will be able to generate it or convert it into cash. Yes, all right. So just remember the meaning, that is more than sufficient. Okay, so these are the purpose. Okay, so for what purpose it is useful? For the investors, creditors and other users of financial statement. Okay, so let's just look into this accounting standard 3, cash flow statement. Alright, so let's just understand the main objective of this particular standard. So any standard will be having its own objective, scope, the advantages and disadvantages. Okay, let's just learn the objective of this particular accounting standard. So information about the cash flow of an entity is useful in providing users of financial statement with the basis to assess the ability of the entity to generate the cash and cash equivalent and the need of the entity to utilize these cash flow. Okay, what is the main objective? The main objective is to assess, okay, how exactly the business entity is able to generate this particular cash and cash equivalent and in what efficient manner is it able to utilize the same. Okay, so when it comes to objective, so cash flow statement is prepared to provide the information to the users of financial statement as to the manner in which the business entity is able to generate the cash and cash equivalent and the utilization and the manner of utilization. So this cash flow statement will give us information or give the information to various users of financial statement as to in what manner, okay, so the business entity is able to generate this particular generate this particular cash and cash equivalent and what is the manner in which it is utilizing the same. Okay, so these are the information which will be provided to the users by just having a look at this cash flow statement. This is the main objective of accounting standard 3. So the economic decisions that are taken by the users require an equivalent or evaluation of the ability of an entity to generate the cash and cash equivalent and the timing and certainty of their generation. Okay, so in order to take up some economic decision for various users, they'll be using this particular cash flow statement. Not important again. So in this particular unit, if you just refer to the theoretical point what I'm mentioning and how exactly are we supposed to prepare this cash flow statement, that would be more than sufficient. All right. Okay, so accordingly, the objective of this standard is to require the provision of information about the historical changes in the cash and cash equivalent of an entity by means of statement of cash flow, which classifies the cash flow during the period from operating, investing, and financing activity. You will have to remember these terms. Okay, so what are they saying? The objective of this standard is to require the provision of information about the historical changes in cash and cash equivalent of an entity by means of statement of cash flow, which classifies the cash flow during this particular tenure into operating, investing and financing activities. Okay, so let me just write this. Okay, so the information or the cash flow shall be classified into 3. Okay, so what are those? The first thing is cash flow from operating activities. The next thing would be cash flow from investing activity. And the last thing would be cash flow from financing activity. Clear? So these are the three classification what we do when we prepare this cash flow statement. So practically when we start learning about preparation of this cash flow statement, all the cash flow will be segregated into these three: cash flow from operating activity, cash flow from investing activity, and cash flow from financing activity. See, very simple. Briefly, let me tell you what exactly are these three things. See, when it comes to operating activity, these are mainly your basic activities, okay, which you carry on in your business for the purpose of generating the income. So this will mainly be covering what? Your P&L account. Okay, so this will mainly be covering your P&L account. So totally we have got three, right? Cash flow from operating activities, investing activity, and financing activity. Okay, so when it comes to this operating activity, this will mainly include your P&L account items. Okay, so the purchases what you make, the goods whatever you sell, okay, the salary whatever you pay. Okay, so all these expenses, the packing expenses, transportation charges, all these things will be forming part of what? Operating activities. Okay, the basic business whatever you carry on, or the basic business activities whatever you carry on in order to generate the profit. Okay, that would be your operating activity. Now when it comes to investing activity, this will mainly be focusing on the asset side of the balance sheet. Okay, this mainly focuses on the asset side of balance sheet. Okay, so on the asset side, this will mainly be including your long-term assets. Okay, so this will mainly be focusing on your long-term assets and long-term investment. So long-term assets, that is nothing but the capital asset, or you can just call it as fixed assets and long-term investment. Okay, so this will mainly be focusing on your asset side of the balance sheet. So purchase or sale of fixed asset, when you purchase the fixed asset, okay, you're making an investment in those assets. So that would be considered as investing activity. Correct? That would be outflow, right? So cash outflow from investing activity. When you're purchasing the asset, the money goes out. Clear? So this will mainly be focusing on your fixed assets and the investment. Clear? So finally, when it comes to this financing activity, this will be focusing on the liability side of the balance sheet. Okay, and not all the liabilities. This will mainly be focusing on the capital and long-term loan. Okay, so this will mainly be focusing on capital and long-term loan. So any changes, now when you are issuing the shares, you will be receiving the money, right? So the money whatever you are receiving, that is not a part of your operating or investing activity, that is rather a part of your financing activity. Clear? So when you took a particular loan or debenture, okay, you issued the debenture, you just received the amount, so that would be treated as what? Cash flow from financing activity. Hope you guys understood this. Is this clear? So anything relating to the share capital, debentures, loan, etc. will be treated as what? It would be treated as a part of financing activity. So briefly, this is the meaning. Okay, in detail, I'll be explaining you again. Okay, so when you're preparing the cash flow statement, that has to be segregated into these three activities. How much exactly is cash flow from operating activity? How much is the cash flow from investing activity? How much exactly is the cash flow from financing activity? You will be calculating the cash flows separately. Okay, and at the end you will be adding all these three. Okay, so practically once we start learning about the format of preparing the cash flow statement, you guys will get a better picture. Clear? Okay, so that's all pertaining to this particular objectives. Now let us talk about the scope of this accounting standard 3. So as per accounting standard 3, all accounting standard compliant entities shall prepare a statement of cash flow in accordance with the requirement of the standards and shall prepare it as an integral part of its financial statement. You already know this is an integral part of the financial statement for each period for which financial statement are prepared. Now those companies for which accounting standard is applicable, they will have to prepare this cash flow statement, okay, as an integral part of preparation of financial statement. For what period will they be preparing this cash flow statement? That particular period for which they are preparing the financial statement, for the same tenure, they just need to prepare this cash flow statement. Is this clear? All right. So now let's talk about the benefits of cash flow information. Okay, so what benefits does this particular cash flow information provide? Okay, a cash flow statement when used in conjunction with the rest of the financial statement, that is in addition with the rest of the financial statement, it provides information to enable the users to evaluate the changes in the net asset of an entity, its financial structure including the liquidity and solvency. See, when it comes to financial statement, if you are just having a look at the P&L account and balance sheet, P&L account will just give you the information as to the profit or loss which is made by the business entity. Same way when it comes to balance sheet, that will give you the information as to the financial position. Now, if I want to determine the liquidity and solvency position, okay, so these two are not achieved by looking at this P&L account and balance sheet. This is achieved only by ascertaining this cash flow statement. Okay, only if I just have a look at this particular cash flow statement, I'll be able to determine what exactly is the state of liquidity and what exactly is the solvency position of this business entity. Clear? That is what they're telling. This is one of the benefit. So by just having a look at the cash flow statement, it will give me an information as to what exactly is the liquidity position and what exactly is the solvency position of the business entity. Clear? Okay, and its ability to affect the amount and the timing of cash flows in order to adapt to the changing circumstances and opportunities. Cash flow information is useful in assessing the ability of entity to generate the cash and effective utilization of the same. Look at this. Ability of the entity to generate the cash and cash equivalent and enables the users to develop models to assess and compare the present value of the future cash flow of the different entities. Just remember this much, that this cash flow statement will be giving us information about determining what exactly is the ability of the business entity to generate the cash and cash equivalent and in what manner, okay, is this business entity utilizing the same. Okay, the same point whatever we have discussed already. It also enhances the comparability of the reporting of the operating performance by different entities because it eliminates the effect of using different accounting treatment for the same transaction and events. Okay, so I can just compare how much exactly is the cash flow from operating activity of this entity with some other entity, which will be helpful for me to determine the actual operating results. Clear? The next thing is, historical cash flow information is often used as indicator of the amount, timing and certainty of the future cash flow. It is also useful in checking the accuracy of the past assessment of the future cash flow and in examining the relation between the profitability and the net cash flow and the impact of changing prices. See, here when it comes to cash flow statement, do we record the actual figure which has already incurred or do we estimate it? No, right? Will not be doing any estimation, will not be showing any estimated value when it comes to cash flow statement. All the figures whatever has been shown in the cash flow statement are the actual figure. That is why they use the term historical cash flow. So whatever amount you have already spent, same thing I am showing in the cash flow statement. So with this, I can also estimate in future what exactly will be the cash requirement for operating activity, investment activity and financing activity. Even this can be estimated. Clear? All these things not at all important from examination perspective, guys. So let's not waste too much of time on them. So presentation of statement of cash flow, as you already know, when it comes to cash flow, you will be showing it in this form. Okay, cash flow from operating activity, cash flow from investing activity and cash flow from financing activity. Just remember these three terminologies. So practically when you prepare the cash flow statement, you will have to separately show how much is cash flow from operating, how much is cash flow from investing and how much exactly is cash flow from financing activity. Clear? The next thing is, some of these three types of cash flow reflects the net change in the cash and cash equivalent of the entity. Okay, so after this, okay, we just need to add all these three and consider the total. Now some places we would have got positive amount, some places we would have got negative amount. Now let's say cash flow from operating activity we got it as negative, cash flow from investing and financing activity we got it as positive. So you need to calculate the net cash flow, okay, of all these three activities, just the sum of all these three activities, the cash flow of sum of all these three activities. Okay, so cash shall consist of cash in hand, demand deposits and cash equivalent. See, when it comes to cash and cash equivalent, what and all things will be included? So when I say cash, it will also be including cash equivalent or cash at bank. Look at this. Cash shall consist of cash in hand, the demand deposit. What is demand deposit? The money which I have deposited and on demand I can withdraw the same. Okay, so easily I can convert it into cash basically. So cash equivalent consists of short-term highly liquid investment that are readily convertible to known amount of cash and which are subject to an insignificant risk of changes in the value. So what are cash equivalent? So when it comes to cash equivalent, these are nothing but short-term highly liquid investment, okay, which are readily convertible into cash. Okay, so these investment I can readily convertible into cash. That is why they are telling highly liquid. Okay, so when I say highly liquid, easily you guys can convert it into cash, which are readily convertible to known amount of cash and subject to insignificant risk. It should not be that short-term investment are made in risky ventures. Okay, so the investment wherein you are making should be those investment wherein the risk is substantially lower. Okay, so basically you should have invested all these money in risk-free investment, okay, which can easily be converted into cash and which are highly liquid. Clear? So that is the meaning of cash equivalent. Remember this particular term. Okay, so I'll just write this. Cash shall also include, or cash shall consist of cash in hand and demand deposit. Cash equivalent refers to those short-term investment which are highly liquid and can be converted into cash or into known amount of cash, which can be readily converted and shall possess, okay, insignificant risk. Hope you guys understood this. So the risk level should be substantially less, okay, because if you are investing in risky venture, there are possibility that the value of the investment may straight away come to zero. Okay, so that is why the risk should be substantially lower. All right. So following points shall be kept in mind with respect to cash equivalent. Okay, so here that again talking about cash equivalent, what are the point which we'll have to remember? The first thing is cash equivalent are held for the purpose of meeting short-term cash commitment. So these short-term investment or cash equivalent should be made only for the purpose of meeting the short-term cash commitment. For an investment to qualify as cash equivalent, it must be readily convertible to known amount of cash and should be subject to insignificant risk of change in the value. So 2 points or 2 conditions should be satisfied. These investments should be readily convertible into cash and should not be possessing high amount of risk, should be possessing insignificant risk of change in the value. The value should not substantially change. An investment normally qualifies as cash investment when it has short maturity of say 3 months or less than that. So when I say short-term investment, so these investment will be maturing within a span of 3 months or pretty much lesser than that. Okay, so the next thing is equity investment are excluded unless they are in substance of cash equivalent. Tell me why exactly equity investment? What is equity investment? The money whatever you are investing in equity shares of some other company. See, when it comes to listed company, don't you think the market price is subjected to fluctuation, right? The market price or the listed price is subject to a lot of fluctuation. Okay, we cannot say that it has got insignificant risk. It has got significant amount of risk. Okay, the prices may fluctuate a lot. Okay, so that's the reason any investment which you are making in equity is not considered as cash equivalent. Remember this particular point. Okay, so the next thing is bank borrowings are generally considered to be financing activities. However, when bank overdraft, okay, which are repayable on demand, okay, form an integral part of entity's cash management, bank overdraft are included as a component of cash and cash equivalent. See, if at all I am borrowing any amount, normally that would be considered as what? That would be considered as cash flow from financing activity. Remember cash flow from financing activity? So any loan or amount which I borrow, that will be forming part of your financing activity. But here what are they telling? If at all there is any bank overdraft facility which is provided by the bank and which are repayable on demand, that will be forming an integral part of cash and cash equivalent. Okay, so those bank overdraft which are repayable on demand, that will be considered as if it is equivalent to cash. Okay, other than that, if at all you are borrowing any amount, that would be considered as what? That would be considered as cash flow from financing activity. All right, so let's just look into this last point. Cash flow exclude movement between items that constitute cash or cash equivalent, because these components are part of cash management of an entity rather than part of its investment, operating and financing activity. Now let's say there is movement from one bank account to another bank account. Okay, business entity has got two bank account. Now it is transferring the funds from one bank to another bank. Both of these banks are belonging to the business entity only. So this is neither a cash flow from operating activity, nor a cash flow from investing activity, nor a cash flow from financing activity. It is just a part of cash and cash equivalent. Okay, so such changes you need not show in the cash flow statement. Look at this, that's what they're telling. Cash flow exclude the movement between the items, okay, that constitute cash or cash equivalent. Is this clear? I hope you all understood this. Anybody having any doubt, any confusion, guys? Clear? All right. Okay, let's just look into this illustration number 1. Let's see what exactly is this. M Limited has a cash balance, or had a cash balance of 1,50,000 on 30th September 2021. On 15th October 2021, M Limited used the cash balance to purchase short-term bank deposit with a maturity of 3 months. Okay, so how should this be shown in the statement of cash flow to be prepared for the quarter ended 31st December 2021? See, it had a cash flow or the net cash balance of 1,50,000 on what date? 30th September. Okay, now what did it do? On 15th October, it used the cash balance to purchase a short-term deposit. It is depositing the money in short-term deposit, which has got a maturity of what period? It has got a maturity of 3 months. Okay, now tell me, will this amount be considered as if it is equivalent to cash? Can you consider this as cash equivalent? Yes? What do you think? Look at this. As per Ind AS 7, cash flow exclude the movement between the items that constitute cash or cash equivalent, as these components are part of cash management of entity rather than a part of its operating, investing and financing activity. So this amount you cannot consider it as cash flow from operating, investing or financing activity. Okay, so this is an integral part of cash equivalent, and any movement from cash to cash equivalent or from cash equivalent to cash, okay, you cannot consider as a part of cash flow statement. Look at this. The purchase of short-term bank deposit is therefore not shown in the statement of cash flow, because it will not be giving any impact. From one bank account, if I'm transferring the amount to other bank account, does it mean that I earned some additional cash? No, right? So it is as good as 100 rupees I've got in my right pocket. So from the right pocket I'm taking and I'm just shifting it to the left pocket. So just because I took away 100 and just kept it in the left pocket, does it mean that I earned additional 100 rupees? No, right? It's the same money whatever I've got. Okay, I've just transferred it. Okay, so any transaction wherein the inter transfer is happening between cash and cash equivalent. Suppose you are transferring the money from cash to the cash equivalent, or from the cash equivalent to the cash. So these transactions will not have any impact or will not lead to any impact in the cash flow statement. Therefore, they do not form part of your cash flow statement. Is this clear? Hope you guys understood this. Okay, so I'll just write this point also. Cash flow statement shall exclude the movement between the cash and cash equivalent, as they do not form part operating, investing or financing activities. Clear? So they do not form either as a part of your operating, investing or financing activity. Therefore, they do not form part of your cash flow statement. Okay, for example, cash transfer to short-term demand deposit. Clear? Hope you guys understood this. Anybody having any doubt, any confusion so far? Is this clear? All right. All right. So let's talk about this next concept, that is the meaning of all these activities. We have got cash flow from operating, investing and financing activities. Let us just identify. Okay. So let us just understand all these three activities in detail in such a manner that any transaction you guys see, you should be able to identify whether it is cash flow from operating activity, investing or financing activity. Sorry guys. Yeah. Now let's start up with this cash flow from operating activity. See, when it comes to operating activities, as I already briefly explained you, this will mainly be including those transactions which are your business activities. So normally we'll be calling it as primary revenue generating activities. Okay, so this is the term what we use. Okay, so revenue generating activities. Now, in order to generate the profit, what are the basic business activities which you are carrying on? Okay, you will be purchasing the goods, you will be selling the goods, you will be paying the rent, electricity bill, salary, etc., other administration cost. All these things will be an integral part of your operating activities. So, any inflow or outflow relating to the same will be considered as cash flow from operating activity. Okay, so any transaction with respect to those activities, okay, which are helpful for the purpose of generating the revenue, okay, will be your operating activity. Okay, so let's just look into your study material. So cash flow from operating activities are primarily derived from principal revenue generating. Okay, look at this, principal revenue producing activities of the business entity. So therefore they generally result from the transactions and other events that enter into determination of profit or loss. The same thing what I told you. So those transactions which is helpful for the purpose of determination of your profit or loss will be treated as what? These are the things which will be treated as cash flow from operating activities. All right. Okay, look at this. They have given you quite a few examples of cash flow from operating activities. What are those? Cash receipt from the sale of goods or rendering the services. Cash receipts from royalty, fee, commissions and other revenue. Cash payment to the suppliers for goods and services. Cash payment to and on behalf of the employees. Okay, so any amount whatever you are paying to the employees, okay, like salary, commission or any other remuneration. Cash receipts and cash payment of an insurance entity for premium and claims, annuities and other policy benefit. Cash payments or refund of income taxes unless they are specifically identified with financing and investing activities. Cash receipts and payment, okay, from the contract held for dealing or trading purpose. Okay, so note, cash received on account of sale of an item of plant is a cash flow from investment activity. See, when it comes to sale, okay, only those cash flow which you are generating from the sale of goods or rendering the services will be forming a part of your operating activity. If you are selling any fixed asset like sale of plant, sale of furniture, sale of equipment, sale of vehicle, all these things will not be forming part of your operating activity. Remember, I told you anything relating to assets, that would be considered as what? That would be considered as investment activity. So here when I say operating activity, it should be with respect to sale of goods or rendering of the services. Okay, so if anything relating to assets, that would be treated as what? That would be treated as a part of investment activity. Clear? So let's just write these points. Okay, so these are the cash flows which are primarily generated from the principal revenue generating activity. Of the business. Clear? So therefore they generally result from the transaction and other events that enter in the determination of profit and loss account. Okay, so it mainly includes those transactions that enter in determination of profit or loss. That is mainly your P&L account. Okay, so let's talk about the examples. So when it comes to examples, okay, so cash receipts from sale of goods or rendering of services. Okay, so same way, any cash whatever you are receiving in the form of interest, commission, royalty, etc. Look at this, cash received from royalty, fees, commission, etc. Okay, so cash received in the form of royalties, commission, fees, etc. All right. Same way, cash payment to the supplier of goods or services. Okay, if at all a particular person is supplying you goods or services, the payment whatever you make, okay, that would be treated as what? Even that would be a part of your operating activities only. Whether the money what you receive from the customers or whether the payment what you make to your creditor or supplier, both will be treated or forming part of what? Operating activities. Okay, so that the next thing is cash payment to the employees. Okay, so cash receipts and payment of an insurance company for premiums and claim. Okay, so this is with respect to insurance company what they are talking about. Insurance company with respect to premiums and claims. Okay, so cash receipts and payment from the contract held for dealing for trading purpose. So for the purpose of your trading, if at all you have entered into contract, and for the purpose of those contract, if you are making any payment or if you are receiving any amount, that would also be considered as operating activity. Okay, so just remember this much more than sufficient. Clear? So I'll just write it in this way. Cash receipts and payment of certain contracts entered primarily for the purpose of trading. So for the purpose of trading, if at all you had entered into some contract, and if at all you are making any payment or if at all you are receiving any amount with respect to such contract, that would be treated as what? That would be treated as an integral part of cash flow from operating activity. Okay, so these are the examples, and always remember, okay, so I'll just write this particular point again. Cash received from sale of plant and machinery or any other fixed asset shall not be considered as a part of operating activity. Although it is sale, it is not considered as a part of operating activities, rather shall be considered as a part of investment activity. Clear? So anything relating to fixed assets and long-term investment will be forming part of your investment activity. I hope you all understood this. Clear? So that's all pertaining to this operating activity. Let's talk about the next thing, that is cash flow from investment activity. So the activities of acquisition and disposal of long-term assets and other investments not included in the cash and cash equivalent are investing activity. Now there might be certain short-term, okay, short-term investment which will be treated as a part of cash equivalent. That should not be considered over here as a part of investment activity. Remember, short-term marketable securities, when I say, it will be including short-term investment which are highly liquid and readily convertible into known amount of cash. Okay, so that will not be forming part of your investment activity. Why? Because that is an integral part of cash equivalent. Okay, so that's why they are using the term like this. The activities of acquisition and disposal of long-term assets and other investment not included in cash and cash equivalent. Okay, so let me just write this. Cash flow from investment activities. It shall include the cash flow from acquisition and disposal of capital assets, or you can call it as long-term assets. Long-term assets and other investment which do not form part of which do not form part of cash and cash equivalent. It should not be forming part of cash and cash equivalent. Okay, so after this, as usual, they would have given you a few examples. Look at this. So any cash payment for the purpose of acquiring a property, plant, equipment, intangible assets and other long-term assets. Okay, so I'll just write these examples. Amount paid towards acquisition of property, plant and equipment, intangible assets, etc. Look at this. Intangible assets and long-term assets. So these payment include those relating to capitalized development of cost and self-constructed property, plant and equipment. So amount paid towards acquisition of property, plant and equipment, intangible assets and other long-term investment. Look at the next thing. Cash receipts from sale of property, plant and equipment, intangible and other long-term assets. See, initially we made the payment, now we are selling and receiving the amount. Okay, so cash received from the sale of property, plant and equipment and other intangible assets and long-term investment. Clear? The next thing is cash payment to acquire equity or debt instrument, okay, of other entities. Cash payment to acquire equity and debt instrument of other entities and interest in joint venture. Okay, so other than the payments for those instruments considered to be cash equivalent or those held for dealing for the purpose of trading. Now, if you guys remember the concept of holding and subsidiary company. So, if I am the holding company, I will be holding the stakes of my subsidiary company. That would still be considered as what? An investment activity. Okay, so cash payment to acquire the equity and debt of another entity. Okay, so equity and debt of other entity. Cash payment made towards acquisition of equity and debt of other business entity. Okay, so then the next thing is cash received from sale of equity or debt instrument of other entities and interest in joint venture. Same thing here, cash payment, here it is cash receipt. Cash received from sale of so sale of equity and debt. Okay, so equity and debt instrument, or you can just call it as what? Interest in joint venture. Okay, so equity and debt instrument and interest of joint venture. Clear? So if at all I am selling these stakes, I will be receiving the money. Okay, so that would be again a part of investment activity. The next thing is cash advances and loans made to other parties other than advances and loan made by the financial enterprises. So other than the loans and advances relating to financial enterprises, okay, if at all there's any cash advances and loan made to other parties, okay, so you have given the loan to other parties or you have made an advance to the other party, that would be treated as what? That would be treated as investment activity. Okay, so cash advance and loans made to other parties other than the loan from financial institution. Okay, then the next thing is cash receipts, okay, from the repayment of advances. See, exactly opposite, guys. So here if you see, you are making the payment, you are providing a loan to other people, okay. So whereas the next point is cash received as the repayment of loans and advances from others. Okay, so you provided a loan and advance to somebody. So when at the time when you provided the loan, it was the cash payment, the outflow. So same person, if is repaying the amount, that would be considered as inflow. All right. So then the next thing is cash payment for future contracts, forward contracts, option contract and swap contract, except when the contracts are held for dealing or trading purpose or the payments are classified as financing activity. So this is mainly with respect to trading activities, cash payment for the purpose of future, forward and option contracts. Okay, so cash payment. So normally we'll be calling it as F&O segment, okay, futures and option segment. Over there, if at all you're making an investment, okay, so that would be treated as what? As a part of investment activity. Okay, so cash payment for future contract, okay, forward agreement, so future contract, forward contracts and option contract. Okay, so here the next point again exactly opposite. Okay, so instead of cash payment, it would be cash receipts from future contracts. Okay, everywhere if you see they're talking about outflow and inflow. Here also if you see they're talking about outflow and inflow, outflow and inflow. So all those transactions they're talking about what? Outflow and inflow. Look at this. Here you made a payment towards purchase of property, plant and equipment or other intangible. Here they are talking about the cash which you receive by selling all these assets. Here they are talking about the cash payment which is made towards acquisition of equity or debt instrument of other entity or interest in joint venture. Here they are talking about sale of those stakes. Here they are talking about the cash advance which you are making, okay, to a person other than financial institution. Here the next point they are talking about the cash which you receive as repayment. Here they are talking about the cash payment for the purpose of future contract, forward contract and option contract. Okay, but here they are talking about the cash which you receive by selling these particular contracts. Is this clear? Hope you guys understood this. Okay, and lastly we have got cash flow from financing activity. So these are the activities that result in change in the size and composition of owner's capital and borrowing of the organization. So any changes in the owner's fund, there is nothing but the capital, and any changes in this particular long-term borrowing will be forming part of what? Will be forming part of cash flow from financing activity. Accordingly, it includes the receipts from issue of shares, bond, other instrument, borrowing and repayment of loan. Example of cash flow arising from financing activities are cash proceeds from issue of shares or other similar instrument, cash proceeds from issuing debentures, loans, bonds, mortgage and other short-term loans and borrowings, cash repayment of the amount borrowed, etc. Okay, so this is cash flow from Alright, let's talk about cash flow from financing activity. So here when it comes to cash flow from financing activity, it will mainly be including those activity which will be affecting the owner's capital and borrowings. Okay, so it shall include those cash flows which shall affect the owner's capital and borrowings. Okay, so example for this would be cash receipts from issue of shares, debentures, borrowings, etc. Clear? So any money whatever you receive by issuing the shares, okay, securities, debentures or other securities. Okay, so then the next thing is cash proceeds from issuing the debentures, loans, bonds, mortgages, short term, etc. Cash repayment of amount borrowed. Okay, so cash repayment for the amount borrowed. Simple. I hope you guys understood this. Anybody having any doubt, any confusion so far? Hope you guys understood what is operating activity, mainly your P&L account, investment activity, mainly your long-term assets, that is fixed assets and long-term investment, financing activity mainly related to those activities which will result in changes in the owner's fund, and long-term borrowing, that is equity share capital, preference share capital, debentures and long-term borrowings. Clear? All right. Okay, let's learn about reporting of these cash flows. How exactly are we supposed to report these activities in the cash flow statement? An entity shall report cash flow from operating activities under either the direct method, whereby major classes of goods, gross cash receipts and gross cash payments are disclosed, or indirect method, where the profit or loss is adjusted for the effect of transactions of non-cash nature, any deferral or accrual of any past or future operating cash receipts and payments, and the items of income or expenses associated with investing and financing activities. Okay, so under the direct method, see, I'll just tell you briefly what exactly is this direct method and indirect method. So with respect to cash flow statement, we have got two methods of preparing the same. So one is direct method, the other one would be indirect method. Clear? All right. See, when it comes to direct method, all that I need to do is, when I say cash flow from operating activities, I'll straight away be showing the cash inflows. Okay, let's say I've got quite a few cash inflows. From this, I'll be deducting the cash outflows. Okay, so then I'll be getting the net cash flow from operating activity. This is direct method. Just consider the inflows from cash. You sold the goods, you received the money, you received some commission. All these inflows you received from royalty. All these inflows show it. From this total inflow, just keep on deducting the outflows. The salary what you pay, the commission what you pay, expenses whatever you incurred. Okay, all these outflows just deducted. The net cash flow will be what? Cash flow from operating activity. Okay, now after this, similarly we'll be preparing investment activity and financing activity. See, the only difference between the direct method and indirect method is with respect to determining the cash flow from operating activity. Cash flow from investing activity and cash flow from financing activity is not going to change. It doesn't matter whether you're following or whether you're preparing the cash flow statement under direct method or indirect method. Both the places it would be exactly the same approach. Clear? So cash flow from investment and financing activity are not going to change. Whether you are preparing the cash flow statement under direct method or indirect method, it is not going to change. So only the cash flow from operating activities would change, okay, under direct method and indirect method. So direct method, straight away, you'll just be considering the cash inflows, you'll just be considering the cash outflows, and then you'll be finding out how much exactly is the cash flow from operating activity. When it comes to indirect method, here what will happen is from the profit, okay, from the profit you will be making certain adjustment. Okay, you will be adding few items, you will be deducting few items, and then you will be arriving at the cash flow from operating activities. See, here straight away cash related information you know, but here you will not be knowing. So you'll know how much exactly is the profit. Okay, so profit you'll get to know from the P&L account. From this particular profit, you will have to find out what exactly will be the cash flow from operating activity. Now let me give you an example. So let us say that you got a profit of 50,000 rupees. Now in the P&L account, you would have considered a lot of information. Now one such information would be depreciation. Okay, so P&L account, on the debit side you have shown to depreciation 4,000 rupees. Okay, 4,000 rupees of depreciation you have shown. So by deducting this particular depreciation only, you got this net profit of 50,000 rupees. Now don't you think this depreciation is a non-cash item? It is a non-cash item, right? So from the income you deducted this 4,000 rupees. After that you got this 50,000. But in order to determine this cash flow, should you be deducting this 4,000 rupees of depreciation? No. Why? Because this is non-cash item. I wouldn't have paid any cash to any person. Okay, so that's why what we do is we'll just add back this depreciation. Okay, so depreciation of 4,000 rupees, we'll just be adding it. So total cash flow will be 54,000. So like this, we'll be having a lot of other information also, like bad debts, provision, outstanding expenses, etc. Okay, so all those adjustment has to be given effect, and finally you will be finding out the cash flow from operating activities. Okay, so this is one item, that is a non-cash item, which will be shown in the P&L account. In the P&L account, some other items relating to investment and financing activity also will be shown, like the interest which I paid. Okay, on the loan which I took, I paid some interest. Okay, so I paid an interest, let's say, of 2,000. Now is this my operating activity? So this 50,000 rupees is the basis what we took, but this 2,000 rupees also has been deducted. This was not supposed to be deducted in order to finding out the operating activity. Why? Because this is the interest which I paid on the loan which I took. So this interest, what I do is I'll just add back over here. Okay, so add back the interest on loan 2,000 rupees, and where will I be deducting? I'll be deducting it under the financing activity. Okay, under the financing activity I'll be deducting this interest. So basically what I'm trying to convey is, when it comes to indirect method, from the profit we just need to ascertain the cash flow from operating activity. There might be certain non-cash item, and there might be certain items which are not related to operating activities, that is the items relating to your financing and investment activities. You just need to give adjustment for these items, that is non-cash items and items relating to financing and investment activity, and then finally arrive at the cash flow from operating activity. That is what is indirect method. When it comes to direct method, very simple. All the cash inflows just added and all the cash outflows just deducted, and the net cash flow whatever you get, that would be the cash flow from operating activities. Clear? I hope you all understood this. Anybody having any doubt, any confusion? Now read this point, you guys will understand in a better way. Look at this. The direct method whereby major classes of gross cash receipts and gross cash payments are disclosed. Straight away, whatever is the cash receipts or cash inflow and whatever are the cash outflows, I'll just be showing the same. But when it comes to indirect method, look at this. The indirect method whereby profit or loss is adjusted for effect of transaction of non-cash nature. Okay, any deferral or accrual of past or future operating cash receipts and payment, an item or income or expenses associated with investing or financing activity. So you will have to give effect for those items, or you will have to give the adjustment for those non-cash item as well as the items related to your investment and financing activities. Is this simple? Clear? So under the direct method, information about the major classes of gross cash receipts and gross payment, okay, may be obtained either from the accounting records of the entity or by adjusting the sales, cost of sales, that is interest and similar income of interest expense and similar changes or charges for a financial institution and other items. So you need not worry about from where are we going to get the information. Okay, all the information will be readily provided in the question. You just need to prepare the cash flow statement. Okay, so that telling from where will you be getting the information, what exactly is the place from where you will be getting the access of the information in order to prepare this particular cash flow from operating activity under direct method. So one of the place would be your accounting records, other place would be adjusted sales, cost of goods sold and other item of the statement of P&L account. You can just refer to your P&L account, okay, for changes during the period of inventories, operating receivables and payable, other non-cash item, other items for which the cash effect are investing and financing transaction, Under the indirect method, the net cash flow from operating activity is determined by adjusting the profit or loss for the effect of what? Changes during the period in the inventory and operating receivable payable, non-cash items such as depreciation, provision, deferred taxes, unrealized foreign currency gain, undistributed profit or losses of the associates, okay, and other items for which cash effects are investing and financing. Just remember this one point, guys. So when it comes to direct method, straight away all the cash inflows and outflows will be considered. From where will we get the access of the information? From the accounting records and P&L account. But when it comes to when it comes to indirect method, whatever is the profit or loss, that will get adjusted. What and all adjustment are we supposed to make? Two adjustment. One is the adjustment for non-cash item, another would be the adjustment for items relating to investment and financing activity. Easy? Hope you guys understood this. Okay, let me just write this particular point in the notes. The cash flow statement can be prepared under two methods. First one would be direct method. The second thing would be indirect method. So when it comes to direct method, all the gross cash receipts from operating activities and all the cash payment related to operating activities shall be shown, and the net cash flow shall be determined. Clear? But when it comes to indirect method, how do we calculate this? When it comes to indirect method, the profit or loss is adjusted by certain non-cash items and the items related to financing and investing activities. Okay, the profit or loss is adjusted by certain non-cash items and the items related to financing and investing activities for the purpose of determining the net cash flow from operating activity. Clear? The investment or the cash flow, the approach of determining the cash flow or the net cash flow from investment and financing activities shall remain same or shall not change under direct and indirect method. So what did I mention just now? Only the approach of calculating the cash flow from operating activities would change. Okay, under direct method, we'll just be considering the cash inflows and cash outflows. Under indirect method, from the profit or loss, you'll be making certain adjustment and then you'll be arriving at the net cash flow from operating activities. Now, what adjustment do we normally make when it comes to indirect method? So indirect method, the following two adjustments. So what are those? The adjustment with respect to non-cash item, and then the second thing would be the items relating to financing activities and investment activity that has to be removed. Okay, because you are calculating the cash flow from operating activities. For the purpose of determining the net profit or net loss, it would be including non-cash items as well as item related to your financing and investment activity. So you need to make certain adjustment with respect to non-cash items and items related to financing and investment activity, and then arrive at the cash flow from operating activity. Okay, and what about the other two activities? That is not going to change. Okay, the approach of ascertaining or calculating the net cash flow from financing and investment activity would be same. Okay, whether you are following the direct method or indirect method, both the places the approach would be still the same. Okay, for the purpose of determining the cash flow from financing and investment activity. Only operating activities the approach would change. Easy? All right. Okay, after this reporting of cash flow from investing and financing activity, look at this. Here they have totally told investing and financing activity, not separately, because the approach would remain same under both direct method as well as indirect method. Okay, so let's just look into this. An entity shall report separately major classes of gross cash receipts and gross cash payment arising from investment and financing activity. However, cash flow arising from the following operating, investing and financing activity may be reported on a net basis. Look at this. Cash receipts and payment on behalf of the customers when the cash flow reflected the activities of the customers rather than those of the entity, such as the acceptance and repayment of demand deposit of the bank, funds held for the customers, okay, by an investment entity, and rents collected on behalf of and paid over to the owners of the property. Okay, so not relevant, guys. All these points are not relevant. Just remember this much. When it comes to reporting of this cash flow from investment and financing activity, just show the gross cash receipts and the gross cash payment. Look at this. Just show the gross cash receipts and gross cash payment arising from investment and financing activity. That would be more than sufficient. Okay, all these points irrelevant. You guys can just ignore it. Yeah, all these things irrelevant, guys. Okay, even if you guys completely ignore, more than sufficient. Just remember these points, whatever has been written in the notes. Okay, that would be more than sufficient. Yeah, after this we have got an illustration. Let's just look into this particular illustration number 2. Okay, so what are they telling? Classify the following cash receipts and payment of furniture company. Okay, look at the nature of the entity. It is furniture company. So purchase and sale of furniture would not be a investing activity for them. It would be operating activity, because that is their main primary source of revenue generating activity. Okay, so they are asking you to classify the cash flow from operating activity, investment activity and financing activity. Okay, so look at this. The first thing is a receipt from sale of furniture. If they are selling the furniture dealer, his primary business is to sell the furniture. Tell me, will this be cash flow from operating activity, investment or financing activity? Yes? He is a furniture dealer, so furniture is goods for him. Okay, so don't you think this is his main operating activity? So this will be considered as what? Cash flow from operating activity. Okay, so we'll just write this in the notes. Okay, let's just prepare this in the notes. Okay, I'll just write the points. Okay, and then I'll explain you whether it is operating, investing or financing activity. The first thing is what? Receipt from sale of furniture. Okay, first point to remember is you are identifying these transactions in the books of a furniture company. Okay, in the books of a furniture company. Okay, so furniture for them would be goods. Okay, so furniture for these people would be goods. So that is why this would be considered as, okay, tell me whether it is inflow or outflow. You sold the furniture, you are receiving the money. Don't you think it is inflow? Cash inflow from operating activities. Okay, this would be the solution. Okay, this is the transaction and this is the solution. Now the second thing is purchase of furniture. Okay, so purchase of furniture from various suppliers. Okay, I'm purchasing the furniture and I'm paying the cash. Okay, so what do you think this is? Is this cash flow from operating activities or investing or financing activity? The second thing is purchase of furniture from supplier. Yes. Don't you think instead of cash inflow, it would be cash outflow? Even this is something relating to your primary source of revenue generating activity. So it is nothing but operating activity. So even this would be considered as what? This would be considered as cash flow from operating activity only. To be more precise, this is cash outflow. Because when you purchase, obviously you will be spending the amount. Okay, so it is as good as cash payment. Then the next thing is wages paid. Okay, so what about this wages paid? Again operating activity only, because this is one of the integral part of your operating activities. Okay, you need to pay the wages or salary. Wages paid, salary paid, remuneration paid, all these things are your operating activities. Now is this inflow or outflow? Wages paid, you are making a payment. Okay, so therefore this would be cash outflow from operating activities. Clear? Alright, let's look into the next point. The next point is advertisement expenses paid. So for the purpose of promoting your product, you spend some amount towards advertisement. Don't you think it's your P&L account item? And it is something related to your operating activities, right? Okay, so this would be again cash outflow from operating activities. So this is advertisement expenses paid. Clear? Okay, now after this, look at this next point. The next point, what are they telling? Credit sale of furniture. If I am selling the furniture on credit basis, tell me whether this will result in any inflow or outflow of money. I sold the goods to you on credit basis. Okay, what is credit basis? I'll be selling the goods, I'll not be collecting the cash. I'm neither collecting any money nor am I paying any amount. Will this transaction appear in my cash flow statement? No. So cash flow statement will comprise only those information with respect to actual inflow of money or actual outflow of money. Okay, so here also, although I sold the goods, okay, but the goods are sold on credit basis. I'm not receiving any amount over here. Okay, so that's why this will not be forming part of your cash flow statement. I'll just write it. Credit sale of furniture. Okay, so this is, okay, so this will not form part of cash flow statement, as neither cash is received or paid. Okay, so there is no inflow of money nor there is any outflow of money. So even this transaction or this transaction for that matter will not be appearing in your cash flow statement. So then the next thing is miscellaneous charges received, okay, from customers for repair of furniture. Okay, I repaired the furniture, okay, and as a result I just received this particular amount from the customers. Okay, so I just received some service charges from the customers. So as I have clearly mentioned that this is the amount which you received, so it is cash inflow. Is it cash inflow from operating, investing or financing activity? Don't you think this is cash inflow from again operating activities? Correct? So even this is an integral part of the principal generating activity. It is not only selling of goods but also providing the services. Okay, so any amount what you receive from the sale of goods or rendering the services would be cash flow from operating activities. Okay, so miscellaneous receipt from the customers for repairs of furniture. Okay, so this would be treated as cash inflow from operating activities. Clear? Alright, so let's look into the next transaction, transaction number 7. Warranty claims received from the suppliers. Okay, so warranty claims received from the supplier. Now tell me, what about this particular thing? Will this be treated as cash inflow, cash outflow? Is it from operating, investing or financing activity? Look at this. Yes. So the supplier, okay, had supplied the goods. The goods turned out to be defective. It was well within the warranty period, and I'm receiving some warranty amount with respect to the same. See, when you paid the amount towards these goods, don't you think you considered it as cash outflow from operating activity? Now when you're receiving the claim amount, that would again be a part of your operating activities only. Okay, so the next thing is warranty claim received from supplier. So as it is the amount which I received, this would be considered as what? This would be considered as cash inflow. Okay, so cash inflow from operating activities. So let's just look into the next transaction. Loss due to decrease in the market value of the closing stock of furniture. Okay, so this is transaction number 8, right? Loss due to decrease in the market price of closing stock of furniture. See, this is decrease in the market price. Am I literally paying any cash to somebody? No. Am I literally receiving any cash? No. Okay, so it is not a cash flow. Therefore, it will not be forming part of your cash flow statement. See, if the market value has decreased, when I purchase the stock, don't you think I paid for it? That is cash outflow from operating activities. Okay, when I sell the goods, I'll be receiving the money. Now I've got the stock which is available, for which I've already made the payment at the time of purchase. Now if the market value has reduced, okay, you know inventory will be valued at lower of cost or market value. Just because the market value has reduced, does it mean that I'm paying this reduction portion to somebody? No. So this is not considered as cash outflow. Okay, therefore this will not be forming part of your cash flow statement. Okay, let's look into this next transaction. Payment to supplier of furniture. Okay, so I had purchased some goods on credit basis. Now I am making the payment to the supplier. Yes, what transaction would this be? Yes, don't you think even this would be cash flow from operating activities only? Because I purchased the furniture on credit basis. Now after the credit period, I'm just making the payment. Okay, so this is again cash outflow from operating activities. Alright, let's look into the next transaction. Depreciation on furniture of sales showcases. Now showcases which is available in my showroom, it is a part of my fixed asset. Depreciation which is charged on this. Okay, so what do you think? Is there any inflow or outflow? Depreciation of sales showcase in showroom. Okay, even this is not a cash flow. Okay, it is a non-cash item. There is no cash outflow with respect to depreciation. When I say that the value of the fixed asset is reduced, am I making any payment to somebody? Absolutely not, right? Correct? It's just a reduction in the value of fixed asset due to usage, and I'm not literally paying this amount to anybody. Okay, am I receiving any funds? No. Okay, so therefore this would be considered as non-cash expenses and will not be forming part of your cash flow statement. So interest paid on bank loan. Now this is something interesting. Okay, interest paid on bank loan. You took a bank loan. On this particular bank loan, you're paying the interest. Will this be an inflow or outflow? Okay, it would be an outflow. That is pretty much clear because you're paying this interest. Now tell me, is this the cash outflow from operating activity, investment activity, or financing activity? Anything relating to share capital and long-term borrowings and loan. Remember, I told you this is something related to financing activity. You remember this particular discussion? Anything relating to your loan. Look at this. Anything relating to your loan and capital. Okay, so that would be a part of your financing activity. Okay, so this would be cash outflow from financing activities. Clear? Alright, so then the next point is profit on sale of equipment in exchange of new equipment. Okay, so what do you think this particular transaction? I made some profit, okay, on sale of equipment in exchange of new equipment. Yes, I'm purchasing a new equipment. I'm just giving them this old equipment. Now let us say you go to a mobile showroom. Okay, you like a particular product. Okay, in exchange you are giving your old phone. Okay, so don't you think money will get reduced over there? What about the profit? Now let's say, understand this particular example. Okay, so you have an existing phone. Okay, so the value of this existing phone is, let's say, 8,000. You have used it for a certain number of years. 8,000 is the value. You go to a phone showroom. Okay, you pick up a particular new product, the cost of which is 25,000. Okay, 25,000 is the product cost. Okay, new phone cost. Now the person, okay, the storekeeper is able or is ready to give you 9,000 rupees. You paid somewhere around 18,000. After using, you feel that 8,000 is the value. The storekeeper is telling that we are ready to exchange this phone for 9,000. Okay, probably you would have maintained the phone in a good condition. 9,000 is the price for which we are ready to exchange this. Okay, and then they are telling that you need to be paying 16,000 rupees. Okay, 16,000 rupees is the balance cash paid. This 16,000 whatever you are paying, this is your cash outflow. Okay, this is your cash outflow. But what about the difference between these two? Here you are making a profit of 1,000 rupees. Is there any cash flow over there? No, right? So any profit or loss whatever you make, okay, that is not a cash flow. Okay, so cash flow will be generated only when you're receiving the money or only when you're paying the money. Okay, so this particular profit on sale of equipment in exchange of new equipment, it is not a cash flow. I hope you all understood this example. So here the cash flow will be what? This would be the cash flow. Now this difference between these two, 1,000 rupees, this is not a cash flow. I hope you all understood this. Clear? So if you would have agreed for just 8,000 rupees, probably you would have paid 17,000. That 17,000 rupees would be the cash flow. So whether it is profit or loss, okay, which is made on sale of a particular asset, okay, that profit will not be forming part of your cash flow statement. Okay, only the final amount which you receive from selling this particular equipment will be your cash flow. Okay, so profit on sale of equipment in exchange of another equipment. Okay, so will not be shown over here. All right, so this particular transaction, that is the profit or loss whatever we are making. Okay, I hope this point is clear. It would neither be considered as cash inflow or outflow. Okay, so profit on sale of equipment in exchange of new equipment. Okay, so it is not a cash flow. So only the ultimate amount whatever I receive, that would be considered as a cash inflow, or only the ultimate amount what I pay. If I'm purchasing something, I'll be making the payment. That amount which I pay will be the outflow. When I'm selling something, the net amount which I receive after the profit and loss, that would be the inflow. Okay, so profit amount separately, we are not going to show it as a cash inflow or outflow. All right, so let's look into the next transaction. What's the next transaction? Advance received from the customers. Now look at this. Here I'm receiving the amount. Literally I'm receiving the amount, so that is an inflow. Okay, so what type of activity is it? Advance received from the customers. So you are receiving the advance amount from the customer. Maybe the customer would have placed an order for a customized product for which he would have paid some initial advance amount. So that is still a part of your operating activity. And is it an inflow or outflow? You are receiving the advance, therefore this would be an inflow. Okay, so this would be cash inflow from operating activities. Alright, so then the next thing is goods and service tax paid. Now, for what transaction do you pay this particular GST? Don't you think this is paid for the purchases and the sales? You made the sales, okay, so at the time of sale you would have collected the GST amount from the customer, the same you are remitting it to the government. So this is something related to your operating activities. Okay, so GST, goods and service tax paid, is something related to your operating activities, and therefore will be shown where? This will be shown as cash outflow from operating activities. All right, then the last thing is equity dividend paid, okay, for the current financial year. So this is something related to your capital, right? So this is something related to your capital. Okay, to the equity shareholders you are paying the dividend. So this would be treated as what? This would be treated as cash outflow from financing activities. Okay, so equity dividend paid. So this is cash outflow. Okay, so cash outflow from what? So this is not financing, this is operating. Okay, so this would be financing activities. Okay, cash outflow from financing activities. Is this clear? Same thing has been written over here if you guys can see. Okay, so cash outflow from financing activity, everything would be same. Look at the depreciation, it is not a cash flow. Look at this profit or loss, it is not a cash flow. Loss which is made, any profit or loss which you make, guys, it is not a cash outflow. and here it was credit sale of furniture. Okay, when it comes to credit sales, again it would not be considered as cash flow. Is this clear? I hope you guys understood this. Anybody having any doubt, any confusion? Clear about this? All right. Okay, so let's look into this next illustration. Here also they're just asking you to classify, okay, whether they are cash flow from operating, investing or financing activity. Okay, so illustration number 3, classify the following transaction into cash flow from operating, investing and financing activities in respect to a pharmaceutical company. Okay, so here they're asking about identifying whether these are the cash inflows and outflows from operating, investing and financing activities with respect to pharmaceutical company. Okay, that is something related to medicine company. Okay, so let's just solve this. In the books of, okay, so in the books of pharmaceutical company. Okay, so let's take each transaction and then classify. Now you guys just give a try. Okay, first thing is issued equity share. Now don't you think this is something related to your financing activity? This is something related to your share capital, right? So anything with respect to changes in the shareholders fund, okay, or loan, that would be treated as financing activity. Okay, so this particular thing would be treated as what? This would be treated as cash flow from financing activity. Now can you tell me whether this is cash inflow or outflow? I issued the shares, I collected some money, right? So whenever I'm issuing the shares, I'll be collecting some money. So this would be considered as cash inflow from financing activities. Clear? Hope you guys understood this. Okay, so this is done. Let's talk about the next thing. So when it comes to the next thing, that is bonus shares issued. So just like equity shares, I'm issuing some additional bonus shares. Now the next thing is, when it comes to bonus share, will you be collecting any cash? For every 2 share, 1 bonus share is issued. Will you be collecting any cash with respect to issue of bonus share? No, right? So bonus share issued. Okay, so here bonus shares are issued free of cost. Cash is not received in this case. Therefore, this is not a cash flow. Okay, this is not a cash flow and this will not be appearing in your financial statement. Easy? Okay, so then the next thing is right shares issued. Okay, when it comes to right share, what are those things? We have already discussed all these things. To the existing shareholders, I'll be giving the offer with respect to purchase of shares. So whenever the company is planning to issue additional shares, the initial offer will be given to the existing shareholders. If they are purchasing their rights or if they are executing their rights, they'll be paying some amount, right? When they are paying, the company will be receiving. Okay, so right shares issued. Anything relating to issue of shares, it is financing activity, then you need to just cross check whether do you actually receive any amount or not. Here also you will be receiving the amount, therefore this would be cash inflow from financing activities. Clear? So let's talk about the next transaction. Purchase 90% shares of subsidiary company. Okay, now tell me, although this is relating to share, when you're purchasing the shares of subsidiary company, don't you think you are investing in that company? Yes. So purchase 90% shares of subsidiary company. Okay, now don't get confused. Okay, you're not issuing the shares. So these are the shares which you are purchasing with respect to subsidiary company. Okay, if you guys just go back to this discussion what we had, okay, investment transaction, look at this. Somewhere we discussed, yeah. So cash payment made towards acquisition of equity and debt of other business entity. Okay, this is investment activity. Okay, so here I am purchasing 90% of the stake of the subsidiary company. So this would be cash outflow. When I purchase, I make the payment. So this would be cash outflow from what? From investment activity. Because I'm investing in that particular company. Okay, so this would be cash flow from investment activity. Let's just look into the next thing. Dividend received from subsidiaries. I'm receiving the dividend from the subsidiary. The investment whatever I made in the shares of the subsidiary company, now I'm receiving the dividend. So this would again be cash inflow from investment activity. Okay, so dividend received from subsidiary company. This would be cash inflow from investment activities. Clear? So let's talk about the next thing. The next thing is with respect to payment of license fee. Now you guys think of this and tell me whether it is cash flow from operating, investment or financing activity. Okay, payment of license fee. Yes, what do you think this is? Yes. First thing is, tell me what type of transaction is it? Okay, so you are paying some license fee. Are you purchasing the goods? No. Are you selling the goods? No. You are just paying certain amounts towards the license fee. Okay, so let's say you are running a particular pub or a bar. You just purchase a liquor license which will cost you huge amount. Don't you think that is as good as a kind of investment? You are into a production or manufacturing sector, you obtain some license for factory, for running this particular factory. Okay, so these are your one-time investment. The license is necessary for the purpose of carrying on the business. It is an investment what you make. Okay, just like in the building or the premises you carry on the business, same way, in order to carry on the business, you need to obtain some license. Okay, from the regulatory authority. So you need to spend some amount towards obtaining these license. So these are your investment activities. Okay, so this would be treated as what? This would be treated as cash outflow from investment activity. Clear? So let's have a look at this next transaction. Royalty received from the goods patented. Now any royalty which you are receiving, what type of activity is it? Yes. Royalty received, if you guys remember this particular operating activities, the sale proceed from sale of goods. Yeah, here it is. Okay, look at this. Royalty, fee for technical services, all these things would be treated as what? It would be treated as operating activities only. So same way over here, the next transaction, royalty received from goods patented. This is something related to goods. So this would be considered as what? Cash outflow from operating activities. Hope you all understood this. Okay, so let's just talk about the next transaction. So what is the next transaction? Rent received, okay, from letting out of free space. Okay, you got some free space, you are just letting it out to somebody, and from which you are receiving this particular rent. See, you had invested in a particular property, okay, in order to generate some revenue. This is not the primary source of revenue for you. Primary source of revenue is what? By selling the medicine or pharmaceuticals. Okay, so if you are letting out this particular free space and if you are receiving the rent, that is an investment activity for you. You invested in that particular property and this leftover space you are letting out for rent. Okay, so you are generating some additional income, okay, which is not your primary source of revenue. Therefore this would be treated as what? This would be treated as cash inflow from investment activity. Okay, so rent received from letting out the free space available. Okay, so this would be what? This would be cash inflow from investment activity. All right. Then the next thing is interest received on loans, okay, to Y Limited. You have given a loan to Y Limited and you are receiving this particular interest. Okay, so this is 8th, right? Did we miss out something? The numbers have we numbered it normally 1, 2, 3, 4, 5, 6, 7, 8. Okay, there's one more point which we missed out. Okay, after this particular dividend, there was one more point. Transaction number 6. Dividend received from investment in other companies. Okay, so this was from subsidiary and this is from other companies. Other companies also it's not going to change. Okay, so dividend received. Even this is not going to change. Even this would be treated as what? This will also be treated as cash inflow from investment activity. So this would be number 7. This would be the 8th transaction. This would be the 9th one. Okay, so now the next transaction would be the 10th transaction. That would be what? Interest received on loans provided to Y Limited. Okay, so interest received on loan to Y Limited. Okay, so what do you think this is? This cannot be financing activity. Okay, this cannot be financing activity because this is not the loan which you have taken. This is not a liability. This is an asset. This is the loan which you have given to Y Limited, and from the Y Limited you are taking some or you are collecting some interest. Okay, this is another source of revenue which you are getting. Okay, so even this would be cash inflow from investment activity. See, when it comes to financing activity, that will mainly include your share capital and long-term liabilities. Okay, it will be focusing mainly on the liability side of the balance sheet. So this particular loan is the loan which we have given to Y Limited. Okay, so which is an asset for us. From Y Limited, we are collecting some interest. Okay, it is as good as an investment which I have made. I provided some amount, financing investment. Okay, I provided some amount. I am receiving some interest. Okay, from this particular Y Limited. Okay, it is financing business. This is not the revenue which I am generating from my main business. Okay, so it is an investment which I am making. Therefore, it would be treated as what? Cash inflow from investment activity. If at all it has to be treated as financing activity, it should be a liability. But is it a liability? No. Okay, so let's talk about the next thing. Preference dividend paid. Yes, now look at this. So I'm paying the dividend to the preference shareholders. Don't you think this is something related to financing activity? Yes, because this is a part of my share capital. Equity share capital, preference share capital, debentures, long-term loans, all these things would be my financing activity. Okay, so preference dividend paid. So this is again cash outflow from financing activity. Okay, so cash outflow from financing activity. So then interest paid on security deposit. What about this? Yes, interest paid on security deposit. I have collected some amount and for which I am paying the interest. Okay, which is again a financing activity. Interest paid on security deposit. Okay, so this is again cash outflow from financing activity. Okay, then the next thing is acquired the asset of company through issue of equity share. Now you guys tell me, acquired the assets of the company through issue of equity shares. Yes, I'm just acquiring the assets, I'm just issuing the shares. Am I receiving any cash? No. So when I'm issuing the shares, only if I'm collecting the cash, that would be cash flow. Here, by issuing the shares, I'm just acquiring or purchasing an asset. Cash is nowhere involved. So this is not a transaction which will appear in my cash flow statement. Acquired an asset by issue of shares. Okay, not a cash flow. Okay, so why? Because I'm receiving an asset, okay, and I'm issuing the shares. Cash is not forming part of this particular transaction. Okay, now let's have a look into the next transaction. Yeah, so the next transaction is purchased goodwill. When I say that I'm purchasing the goodwill, don't you think it's as good as an investment which I'm making? Goodwill is an asset, right? So any amount paid towards purchase of intangibles, if you see, okay, it is an investment activity. If you just go through this particular part, look at this. Yeah, so cash payments, okay, to acquire property, plant, equipment and intangibles. Okay, if you see this intangibles, even that is a part of your investment activity. So same logic if you apply over here, you paid some amount towards purchase of goodwill, it is an intangible asset, therefore it is a cash outflow from investment activity. Okay, so purchase of goodwill. Okay, so this would be cash outflow from investment activity. Clear? So then we have got interim dividend paid. Again, dividend whatever we are paying to the shareholders, it is a part of financing activities. Interim dividend paid. Okay, so this is again cash outflow from financing activity, just like the preference dividend what we paid. Okay, so that was paid to the preference shareholders, this is paid to the equity shareholders. Other than this, there is no difference. Sale of investment in subsidiaries. Okay, so I had purchased the shares of the subsidiary company, now I am selling the same. When I purchased the shares, don't you think I considered it as investment activity? Yes. Now when I am selling the same, okay, so what do you think this would be? Sale of investment in subsidiary company. When I purchase the shares, if I am considering it as investment activity, same way, if I am selling them, obviously it would be considered as investment activity. There it was cash outflow, now there will be cash inflow. Look at this, somewhere it was there, right? Yeah, purchase of 90% shares of subsidiary company. So this was considered as investment activity, only thing is what? It was cash outflow. Now I am selling the stakes. Okay, when I am selling the stakes, obviously this will lead to cash inflow. Okay, so sale of investment or sale of investment in subsidiary company. So when I am selling them, obviously I will be receiving some money, right? So this would be considered as cash inflow. From which activity? Again from investment activity. When you invested in the shares of subsidiary company, that was considered as cash outflow from investment activity. Now you are selling these particular stakes, you will be receiving the amount. This would be considered as what? This would be considered as cash inflow. I hope you guys understood this. Cash inflow again from which activity? From investment. Doesn't matter whether you invest in the subsidiary company or you withdraw the money from the subsidiary company, both are treated as what? Investment activity. Only thing is, when you made the investment, there was an outflow of money. When you are selling these stakes, there is an inflow of money. I hope this is clear. Alright. Let's look into the next transaction. That's all, is it? Yeah, so that's all guys. Okay, so we have covered this particular illustration number 3. Okay, so you guys can just cross verify with this particular solution. All right, anybody having any doubt, any confusion so far? Hope the concept is clear. Okay, so let's just look into this particular next concept, that is foreign currency cash flow. Okay, now sometimes we'll be entering into transaction with foreign countries. At that time, okay, the currency value will fluctuate. How are we going to treat the same? Okay, so let us understand. So on the date of transaction, whatever is the value of this foreign country currency, that has to be converted into the home country currency or reporting currency. Okay, so sometimes at the end of the year, this will lead to foreign exchange gain or loss. Okay, let us understand how exactly are we supposed to give effect for the same. So cash flow arising from transactions in a foreign currency shall be recorded at an entity's functional currency. Functional currency is nothing but the home country currency. Okay, by applying the foreign currency amount, okay, the exchange rate between the functional currency rate and the foreign currency rate at the date of the cash flow. on the date of this particular transaction, that is the actual cash flow happened. Okay, so if you purchase something, you would have paid the amount, right? On that particular date, whatever is the cash flow, you just need to consider that particular rate. A rate that approximates the actual rate, okay, may be used if the result is substantially the same as it would arise if the rate at the date of the cash flows were used. So the effect of changes in the exchange rates on the cash and cash equivalent held in foreign currency shall be reported as a separate part of reconciliation of the changes in the cash and cash equivalent during that particular period. So on the transaction day, whatever was the rate, just consider that. If at all there is any changes or too much of fluctuation in the foreign currency at that point of time, the difference, okay, might be either foreign exchange gain or loss, even that has to be reported. So let us just look into this particular illustration number 4. On 1st Jan 2022, P Limited, an Indian company, bought goods from USA for $1,000 to be sold within India. The exchange rate on that date was 76 rupees for $1. On 31st March, that is when you're closing your books of account, the exchange rate was 78 rupees for $1. You purchased the goods, right? Okay, so when you purchase, the exchange rate was 76 rupees. You purchase the goods on credit basis. Okay, on 31st March, if you see, what exactly is the exchange rate? It is increased, right? You are supposed to pay. When you purchase, you are supposed to pay at the rate of 76 rupees per dollar, but now it is 78. So 2 rupees it has increased. So 2 rupees would be lost. Okay, 2 rupees per dollar. Totally you purchase goods for $1,000. So 2,000 rupees would be your foreign exchange loss. Okay, so this would be your loss. Okay, so let us understand what they are asking. How will you report the above in the cash flow statement? In the cash flow statement, look at this. P Limited would account for the purchase of inventory. When they purchased, the exchange rate was 76. So 76,000 rupees they'll be showing as what? So if at all they would have purchased on cash basis, 76,000 rupees they would have shown as what? They would have showed it as cash outflow from operating activities. Okay. Now on 1st Jan 2022, yeah, this is the price which they'll be showing. On 31st March, the payable will be recorded as what? 1000 into 78. Okay, so 1000 into 78, 78,000, resulting in unrealized loss of 2,000 rupees on exchange fluctuation. Under indirect method of determining operating cash flow, simple. How much did we get? We got a loss, right? Okay, so this will be comparing it with the changes in the value of current assets and current liabilities. So here there is a payable. Payable value, has it increased or decreased? Payable value has increased. So increase in current liabilities, we just need to add it. So we haven't spoken about this particular concept. Don't worry. Once we start solving the illustration, you guys will get a better picture. Okay. So there's a loss of 2,000 rupees, and then you will be adding this increase in the current liabilities. Okay. Decrease in the current asset. Okay. You'll just be deducting. Why? The reason is very simple. Now let's say, yeah. So let's say increase in this particular payable. Okay, increase in the payable and decrease in the receivable, you will just be adding. The reason is very simple. So when I say decrease in the receivable, okay, so receivable was 80,000. Out of that 80,000, I have received 10,000. Therefore, the receivable has decreased to 70,000. Look at this. Let's say receivable was 80,000. Now the receivable is 70,000. What might be the reason for this reduction? One would be the bad debts, another would be I would have collected the amount from the debtors. When I collect the amount from debtors, don't you think this will lead to increase in my cash flow? Therefore, we'll just be adding it. Okay. Same way, increase in the liabilities. Okay. So increase in the liability means what? Increase in current liabilities, if you see. Okay. Even this will be adding. The reason is simple. So when I say that liabilities or trade payables is increased, it means my goods or the inventory also would have increased. So that's the reason we'll be adding this. Okay. So ultimately, if you see, there's no impact. Remember, I told you any loss or gain. Okay. So you'll not be showing it. Okay. In the cash flow statement. Okay. Same logic. Net impact of cash flow would be nil. Okay. So here there was an overall loss that has been offset by this particular increase in this particular payable. Is this clear? All right, so not much important. Now let's talk about the next concept, that is interest and dividend. Cash flow from interest and dividend received, okay, and paid shall each be disclosed separately. See, if I'm receiving the dividend, obviously I would have invested somewhere. Okay, so this would be considered as what? Cash inflow from investment activity. But if you're paying the dividend, you're paying it to the shareholders. Okay, that is cash outflow from financing activity. Okay, so that is something related to your financing activity. Look at this, cash flow arising from interest paid, okay, and interest and dividend received in the case of financial transaction should be classified as cash flow from operating activities. In the case of other entities, see, for financing activity, that is their main business, right? Okay, so financing entities, that is their main business. What do? They'll be lending the amount, they'll be collecting the money. So for them, if they're receiving the interest or if they're paying the interest, if they're receiving the dividend or paying the dividend, everything will be a part of their operating activities. For other entities, okay, this is what is important. Cash flow arising from interest paid should be classified as what? It is a financing activity. I borrowed some amount, I am paying the interest. Okay, so it shall be treated as cash flow from financing activities. While interest and dividend received, this will be treated as what? Inflow from investment activity. Look at this, should be classified as cash flow from investment activities. Dividend paid will be treated as financing activity. Now let me just write this. For a financing entity, any interest received or paid or any dividend received or paid shall be a part of cash flow from operating activities. Okay, it shall be a part of cash flow from operating activities. For other entities, that is other than financing entities, okay, so what will happen in this case? Interest and dividend paid shall be treated as cash flow from financing activity. Okay, whereas interest and dividend received shall be treated as cash flow from investment activity. So if you remember, this much more than sufficient. Whenever I am collecting some interest or dividend, that is a cash inflow from investment activity, but whenever I am paying any interest or dividend, that would be treated as what? That would be treated as cash flow from financing activity. Same point is being given. Now look at this illustration. X Limited provides you the following information of its cash inflow and outflow for the financial year 21-22. Dividend paid to the equity and preference shareholders 50,000. Let's just solve this. Dividend paid 50,000. So what about this? This would be treated as cash outflow from financing activity. Okay, so cash outflow financing activities. Just check this out. Do you find this? Cash outflow from financing activities. Okay, so even if it is other than financing institution, okay, if you see over here, if it is financial institution and if it is manufacturing concern, that is what they are asking. Okay, so manufacturing entity. Okay, both the cases it would be treated as what? It would be treated as cash outflow from financing activity only. Okay, so let's talk about the next thing. Interest paid 10,000. Here also it would be exactly the same, nothing would change. Okay, it doesn't matter whether you pay the interest or dividend. For financing entity or manufacturing entity, both the cases it would be treated as what? It would be treated as cash flow from financing activity only. Now look at this. Interest received on loan 20,000. This would be different. interest received on loan 10,000. Here it would slightly change. If I am receiving an interest, so this would be treated as cash inflow, okay, from financing activity for a financial or financing entity. For a manufacturing entity, this would be treated as what? This would be treated as cash inflow from investment activity. Look at the solution now. Okay, so interest received, if you see, this is cash flow. Sorry, for the financing entity, it is their main business. So this would be operating activity. Okay, and even this, just a second, even this would be their main operating activity, right? That would be their basic income, right? Okay, one second. Now look at this. For a financing entity, if they are paying this particular interest, okay, so that is their basic source, right? So basic business. So therefore, this would be considered as cash flow from operating activity. But for a manufacturing entity, it would be treated as financing activity. Same way, interest received, here also it would be treated as cash inflow from operating activity for the financing entity. For other thing, it would be treated as investment. Look at this. Operating activity, investment activity. Same way, the last transaction, dividend received. Okay, so dividend received, if you see, again the same thing. For a financing entity, it would be treated as what? Operating activity, and for the other than financing activity, it would be treated as investment. Okay, so dividend received, how much? 5,000. It would be the same. Whether it is dividend or whether it is the interest, the treatment is exactly the same. I hope you all understood this. Is this clear? Alright, so let's have a look into this couple of more illustration. I think we have got 6 and 7, right? Okay, let's just complete this particular part and then wind up the class for the day. Let's look into this illustration number 6 now. B Limited, a manufacturing concern, invested 3 lakh rupees in 5 years bond with effective interest rate of 10% for 4 years. It received 4 lakh 40 on maturity. During the 4 years, it recognized the interest income based on the effective interest rate in its income statement. How will you treat the transaction over the 4 years and on maturity? So it has invested the amount, okay, over a period of 4 years, and at the maturity it is collecting how much? 4 lakh 40. How are you going to treat it? See, first thing is, when it made an investment of 3 lakh, you will be treating it as what? Cash outflow from investment activity. Look at this. Over the 4 years lifetime, the company did not receive any cash payment, hence nothing will be reflected in the cash flow statement. Here on accrual basis, okay, based on effective rate, they just recognize the income. Okay, but normally do we do it when it comes to cash flow statement? No. The actual cash received only will be shown. So there was no actual cash receipt. So for this particular 3 lakh, we'll be showing it as cash outflow from investment activities, and then 4 lakh 40,000 what they received. Okay, this will be again shown as cash received from investment activities. Look at this. On maturity, the entire 4 lakh 40 will appear as cash flow from investment activity with appropriate disclosure for the interest and principal part. Okay, so basically over here 3 lakh will be shown as cash outflow from investment activity, and 4 lakh 40 at the time of maturity will be shown as cash inflow from investment activity. Clear? Okay, then the next concept is treatment of taxes on income. So cash flow arising from taxes on income shall be separately disclosed and shall be classified as cash flow from operating activities unless they can be specifically identified with financing and investment activity. If there's a tax, if they just mention income tax, okay, that is mainly related to your operating activity, okay. So if they mention like capital gain tax, that is something related to the investment, okay. If you are not able to differentiate or bifurcate, at that point of time, this particular income tax, whatever you are paying, will be treated or will be shown separately, okay, as what? As cash outflow from operating activities only. Clear? Look at this. A Limited paid an advance tax amounting to 3,65,000, out of which 15,000 is related to short-term capital gain on sale of securities. How will A Limited report the payment of advance tax in the cash flow statement? Okay, see here they have clearly mentioned the bifurcation. 15,000 is something related to short-term capital gain on sale of security. Sale of security is nothing but the investment activity, right? So even this would be treated as a part of investment activities. Okay, cash outflow from investment activity, and then the balance 3,50,000 will be what? Operating activities. Okay, read the solution. So as per Indian Accounting Standard 7, cash flow arising from taxes on income shall be classified as cash flow from operating activities unless they can be specifically identified with financing and investment activity. In this case, 3,50,000 should be treated as operating cash outflow, while 15,000 should be treated as what? It should be treated as investment activities, cash outflow from investment activities, because they have clearly given that that is short-term capital gain by selling the investment, whereas the remaining 3,50,000, that would be treated as cash flow from operating activity. Easy? Okay, let's look into this next part. Investment in subsidiary, associates and joint venture. This you already know. This would be treated as what? Investment activity. Look at this. When accounting for an investment in an associate, joint venture or subsidiary is accounted for by use of equity or cost method, an investor restricts its reporting in the statement of cash flow to the cash flow between itself and investee. So the aggregate cash flow arising from acquisition, from the disposal of the subsidiaries and other business shall be presented separately and classified as investing activity. This you already know. In one of the illustration, if you guys remember, 90% of the stakes purchased in subsidiary company, that was cash outflow from investment activities. So sale proceeds received from the disposal of sales of or disposal of shares of subsidiary company, that was cash inflow from investment activity. So this is something related to investment activity. Only thing is, you will have to separately show total purchase or disposal consideration, the total portion of the consideration consisting of cash and cash equivalent. Okay, non-cash transactions. Okay, investment and financing transaction that do not require the use of cash or cash equivalent shall be excluded from the statement of cash flow. Such transaction shall be disclosed elsewhere in the financial statement in a way that provides all the relevant information about these investing and financing activities. Okay, so non-cash transaction, they have given few examples. Look at this. The acquisition of assets by assuming directly relatable liabilities, the acquisition of an entity by means of issue of equities. I purchase an asset, I issue the equity shares, no cash is involved. Okay, conversion of debt into equity, no cash is involved. These will be treated as what? Non-cash transaction. Okay, let's look into this last part, that is the disclosure requirement. An entity shall disclose the component of cash and cash equivalent and shall present a reconciliation of the amount in the statement of cash flow with the equivalent items reported in the balance sheet. An entity shall disclose, together with the commentary by the management, okay, the amount of significant cash and cash equivalent balance held by the entity that are not available for use by it. So how much cash is available which the business entity cannot use it? Okay, you need to make a separate disclosure relating to the same. When cash and cash equivalent balance held by the subsidiary that operates in a country where exchange controls or other legal restriction apply, the balance are not available for general use. Okay, you will have to just make a separate disclosure. In addition, what are the additional disclosure which will be made? The amount of undrawn borrowing facility that may be available for future operating activities and to settle the capital commitments, indicating any restriction on the use of these facilities. Not relevant, guys. The aggregate amount of cash flow that represent increase in the operating capacity separately has to be disclosed. So disclosure requirement, even if you guys don't go through it, completely fine. Okay, so fine, we'll just stop over here. In the next class, we'll be talking about the difference between the Accounting Standard 3 and Ind AS 7, and we'll also be learning the pro forma or format. Okay, that's all. If you see the next unit, pro forma or format of cash flow statement under direct method, and indirect method. These are the things what we'll be learning. Clear? So after this, they have given few illustration wherein we'll practically learn about preparation of this particular cash flow statement. Yes, so quite a few illustration. If we just complete this, okay, so the cash flow statement would be done. So probably another 2 to 3 class this particular cash flow statement would be concluded. Okay, we have got quite a few illustrations. Okay, so probably another 3 class we should be able to complete this. Okay, so make sure that you guys glance through whatever we discussed in today's class. Okay, in the next class we'll be talking about the difference between accounting standard 3 and Ind AS 7, and then we'll be looking at this particular format. All right, thank you so much guys, have a great day. Thank you.